Hello everyone, welcome to part 6 of the Trading Masterclass. Today I'm going to be discussing how to take market structure entries. The purpose of this is going to show you what it requires in order to analyze the chart and then decide on an entry and then the potential exit where it's going to go. Okay, so we're just looking for well, I marked up a lot of charts, right? This is kind of what I do, but I want to find one that I haven't really done so we can really dive in and maybe see if there's something coming out in the future, right? Or maybe better yet, I'll do a replay from a long time ago so it doesn't look like we're just kind of picking some random spot, and you can see that it would be a valid trade. So let me see if there's a clean chart. You see I marked up a lot. Alright, GBP USD, sure, this one's pretty clean, good. Alright, judging from where it's at, this is just going to keep dropping, but you know what we can do? Go on the monthly and let's just pick a random point in time. So you see that it looks like it's pretty volatile, and I'll do it where it's consolidating because this is on the monthly scale and it's very difficult to tell back in 2012. Here we go. Okay, it's going to be difficult to tell where it exactly is going in this manner, right? Like you saw, it was just a little volatile. I don't remember the exact moves, but let's see if we can pick something out. Okay, so on the monthly time frame, we dropped it down to the daily. So first thing I can see when I go into this time frame is, let's see. So what we want to do is mark up where we have a bit of resistance, which would be right here. You could see that came up that high, slightly broke through, but dropped lower. Our potential support, which would be right here. I'll match it with the other wicks. There we go. Broke through it a little bit, but it stayed within that range. All right, and then finally, so we're going to be focused more on this area here. So what I can see, whoops, in these particular candles, all right, is this is sticking out for me right here, these three candles, right? That for me tells me that it is a massive rejection off an EMA line that's drawn on the daily, and it wants to go down lower. All right, so from that, let's draw Fibonacci. So going from the peak to the bottom right here, I'll just stretch it across. Look at that, we're sitting right at the 618. Not only that, but if I draw this Gann box, right, on this big daily engulfing candle and take it across, you can see that we're almost at that 50% level here. So just judging by that, we have the fib going for us. We have strong potential trade downwards, right? We just rejected a second time after several months, right? What was the first one? April of 2012, and now it is September of 2012. All right, so 6 months later, I want to say 5 months later, it rejected off almost the exact same spot and it started to drop. All right, so now we have a very distinguished pullback, almost right at the area of the imbalance. So now what I'm going to do is drop the time frame to the 4 hour and see if we can pick anything out of there. Now, the first thing that jumps out of me is this this large imbalance. Right, so as you saw, I drew it up on the daily. Now I'm going to take it and draw it on that particular candle itself, including the wick. Right, if we do the candle, you'll see the entry is so much tighter, but we want to include everything in that time frame. All right, so it's going to be a little bit tighter to take. And you know, the sad thing is, if I would have done it like a month sooner, we'd be able to see exactly where it's going to be bouncing off of. But right now, this would be taking a late entry, right, as it's dropping. So once you realize you got to take, you're going to jump in on the late entry, your stop loss needs to be a tad bit higher, and I would do it off the top of here. Risking it would be more of this area where it's just the top of these two candles, as you can see it dropping, but this isn't exactly engulfing, so that's why it makes me a little bit nervous to take the stop loss there. All right, I would put it somewhere around here, if not right there. So 75 pip stop loss, if you've watched any of previous videos, it's a little much to take on a short-term swing. But if you plan on being in the trade for a month or so, it's really not a problem. And as you can see, just going down to the previous low, we have a potential 2.2 to 1 risk to reward ratio. But if we take it to the daily, right, as you can see here, when we dropped down before and we formed that support, I'd be expecting to go down somewhere similar. Okay, so being able to catch that early, I would say, not getting too greedy somewhere up here. So that's still an 8 to 1 ratio with a 75 pip stop loss. Okay, now this is how I arrived there. This isn't really the most ideal spot to grab this trade, but as you can see, it's very, very close to the area that we're looking for. Off that candle that we saw on the 4 hour, it's in the center of that imbalance. You saw the candles within there. They were almost at the 50%, but not quite. So that's why I raised this a little bit higher, right? To be honest, the best trade would be right here to take it just a little bit above that that actual imbalance that was on the 4 hour, right? That's where I drew that Gann box for. So still a 5.3 to 1 risk to reward is still very good if you plan on staying in a trade for, potentially a month to 2 months. That could take as long to get back down there. But you know what? What I'm going to do is just skip a couple candles forward and see how valid this entry has been. See, this is exactly it. So I thought the move was over, but a good thing is that, what I was saying earlier on the 4 hour, it wasn't quite at this spot. But as you can see, even still, it pulled up just a tad past where entry would have been, right? So if it was something like that, for example, it would have been done. But if we take a look at the daily, where it was that entire span of the candle right here, it would be totally fine. Okay, so like I said, 60, that's a reasonable stop loss, okay? So if it would have been at that entry, it would have been too early. Okay, there is one thing to consider when you take early entries. If you jump in, you could set, if you expect it to go down but not sure at what point to grab it, stops, like buy stops and sell stops, are much better to consider rather than taking limits, like buy limits or stop limits. The difference is because a buy limit will be like this. You're going to be going down, and once it triggers your entry, then you're already going to be going out. So this, for example, like we're going to be looking for a sell. So watch this, for example, okay? If we set a sell limit, we're going to be waiting for the pair to come up to this area, and now we are in the trade. So now this is just going to be going into the stop loss until it reverses. However, there is a way to set up your trade so that you could set your alert right here, and once the candles close firmly above there, set a sell stop. So what would happen is that your trade only triggers once this threshold is crossed, and it would be going into profit. As it is right now, of course, it could do one of these and just bounce off and go into your stop loss, but it's a bit of a better precaution to be in your stop loss range and then set your stop position, because triggering while the trend is starting is going to be much better than trying to catch the reversal, if you know what I mean. So if you've ever heard the term, catching a falling knife, that's what trying to get right at the reversal would be like. There are potentials where that could happen, but as you saw on the 4 hour, it's not quite what we want. On the daily, that's the perfect imbalance that we're looking for here. Even if we drop it a little bit lower, right, you could see that it would have been right here to take, and we would need a pretty deep stop loss to grab. Okay, so overall, it doesn't really matter at that point. The daily is definitely valid, like we'll do wick to wick. All right, and like I showed you, at the 50% is where I would be taking my entries, and I would have my stop loss at just above the previous, or the candle that I'm looking at, right? So if this is the entire imbalance, I'm going to set the stop loss slightly above where that one had its peak. All right, so now let's skip a couple candles forward and see what happens. Oh, it's getting closer. Let's see if, oh, here we go. Now you see exactly what I'm talking about, setting that stop loss just a little bit higher. Look at this. It was scary for a few days, right? It was sitting at negative 56, then it dropped down, then it went back up to negative 53. right? 65 pip stop loss. Like I said, a little bit above that imbalance. Let's continue and see what happens. Oh, to break even. There we go. Stop loss is hit, unfortunately. The only situation when it comes to this sort of trade, okay, is when you have a 65 pip stop loss, I would be looking to set a break even once I'm 65 pips in profit, right? So look at that. It dropped on that wick 70 pips. So me personally, that would have been my stop loss, and I risked nothing at this point, okay? So when it reversed and went all the way up, I'm already out at break even, and I lost nothing. All right, so that's a good practice to have. Whatever your stop loss is, bring that to your break even if you're that much in profit, right? So for example, if you're 30 pip stop loss, then once your pair is 30 pips in profit, move your stop loss to break even and hold it there until, I would say a minimum of 2-to-1 risk to reward is met, and then you can incrementally move up your stop loss so that you keep any potential gains that you have in there. Right? You need to understand, though, sometimes there's going to be very deep pullbacks, and it could trigger your break even and then continue going the way that you were expecting, right? But that's just the luck of the draw. So right now, that's invalid. So that imbalance was filled right here, so we're not looking at that anymore. Now, I'm going to be looking at this candle, the information in there. All right, so where we drew our Fibonacci. So off the 4-hour, this is what we see, and I'll take the fib off. Okay, so now we can see that it wicked off there. 4-hour candles really not giving us much information, but best case scenario, let's see what we can find in there. Oh, data point unavailable. So there we go. Now I have to do that entire reversal again. Hopefully I don't see anything I don't want to see. Hang on a second. So 2012, right? That's where we were at. So I'll hit the replay. 2012. We were around September right here. Okay. And then back to the daily, just so I'm not messing up too much. Okay. Daily. I think that was where we were at, right? September, maybe a little further. Let's press play. Okay, there we go. That's where we were at. That's what we were analyzing, so we saw that it triggered past there. Okay, so this is exactly the same point. Perfect. All right, so just for memory's sake, December 12th, 2012. Okay, so now, like I was saying, I want to be taking a look at what's information in this one. Now, I can't go back on the 1 hour this far, but the 4-hour, what I'd be able to ascertain is that we've hit this point multiple times, right? So now what I'm going to do is drop another horizontal line. Okay, so as you see, every time the wicks hit this line, it drops, right? It drops, and this one didn't even touch, and it's starting to drop. So what this is going to tell me is there's a very good potential to be able to take a sell, like a trade right at the bottom of that, where the peaks are, maybe a 40 pip stop loss, okay? And then we'll move it over, see how that will work out once that possible trade will trigger, okay? But again, we're only going based off previous resistance. It's been resisting off here once, twice, 3 times, okay? That's it. That's the only basis for this entry, and it's a little bit counter trend, right, as you see, because the larger EMAs are pointing up, and the only other thing would be if we draw a Fibonacci from this high to this low. What do we get? All right. So as you can see, we're still in that golden zone. This is a good potential trade opportunity. It's still there. To be safe, just a little bit above that 786 to stay within the golden zone. So again, a 65 pip stop loss. We're expecting a pretty decent drop, right? I mean, at least to the low here, so we can get a 4.9 to 1 risk to reward is very good. However, if this is trending nicely down, I would recommend extending your TP or taking partials, right? So two options that you could do, or you can completely exit the trade, not worry about it. But because of what we've seen previous structure, it's rejecting off that same spot, right? Now it hit kind of a mini spot right there, especially it's in the golden zone of the larger fib retracement, right? So let's switch that back to the daily. This is what we're looking at to enter that trade. and this would probably last a few weeks. And if we take it all the way down, very good 13-to-1 potential risk to reward. But let's move forward a couple of candles and see what happens. All right, so you see, completely invalid this area. It just went down and popped right back up. And let's see how much we were in profit before it actually reversed completely, right? Because I said to enter, where was the entry? Right here? Hang on a second. Yeah, well, what's going on? What did I do? Press the daily. Okay, so that's why. Let's see, to December 24th. Why did this not move forward? Okay, here we go. All right, so let's see what happened here, right? What I was saying with the stop loss. So it was set to be 65 pips approximately. 65 pips in profit, so that would have been a break even. Kind of a bummer, breaking even twice, but hey, there's nothing lost, right? Because I said, as soon as the stop loss amount is in profit, move your stop loss to break even, because this is what you avoid, right? All you would have just had is 2 losses if you didn't move up your stop loss. This way we prevented the loss, and now we broke even twice. Now, again, it's unfortunate, but the biggest issue a lot of traders have is risk mitigation. They do not understand that moving your stop loss when you're in profit is very vital. Now, I mean, it took us a little too far. We see the drop here, but as you can see, when it got up to that point, look, it rejected off that previous zone, whereas you can see here. Okay, so if we skip 1 candle forward, the wick went up. Did it make a new high? No, it didn't, because you can see there's a little dotted line right above my crosshair, and that's showing the previous high on this particular time frame and chart that I'm seeing. Okay, this little red dotted line is where the candle currently closed, right? So it did not break previous high. What that means is that this finally becomes one decent point of entry. Okay, and now I'd be going a little bit above that close, right? So let's see. This is where it might be very tricky to ascertain a proper entry, because now we're just going strictly off resistance and support, right? So now we've broken through once, and right here, or wherever the thing was, right there is now where we see that, hey, you know what? It's resisting there once again. So you know what? Let's switch that back to the 4-hour. Don't worry about the kids in the background. That's how it works with 3-year-olds. All right, so we rejected off there. So I'd be like, okay, 4-hour, that's where the candle closed. I'm going to do a tight stop loss, 30 pips. Okay, now cheating a little bit. We kind of saw where it was going, but this was one more chance for it to take it off a resistance level. Okay, so now let's do 1 candle ahead and see how that panned out. Immediately, right? So watch this. We were 30 pips and it dropped 26. So not yet. Now we would. Now we move stop loss to break even. Okay, it's even at 38 pips and our stop loss was 30. Right? So we're at break even after 8 hours of the trade, right? It's a 4-hour time frame. And let's see it go. Okay, now it broke even. You see, this becomes troubling at times because it could have been that this trade was jumped in a little bit too early. So now you're seeing the potential struggles with market structure entries if you just focus on support and resistance levels. Okay? Now, in order to actually do them properly, right? Because I was just showing you basic entries for structure. But now watch what happens when we wait for an EMA shift, okay? There's our shift, okay? It's very tight to see. Oh, not just yet, but it will be after that next candle, all right? But 2 very simple indicators. The MACD, which is showing right here, even though it kind of popped up a little bit, it's still dropping, right? So now we're going to have to shift the next candle by the looks of things, right? So right here at the close, and don't take entries early, take them at the close of the candle, extremely important. Because look what would have happened if you would have taken it early, you saw it dropping, you thought you'd miss out, right? Immediately it popped back up. So that you'd be already negative 10 pips just based off of that, right? So here we are. What I would do is bring this all the way up to its previous resistance. But as you see, a couple candles already didn't close there, so I would just bring it slightly above there. So now, this is my entry. Now we have structure plus EMA shift. Okay, back to the same spot where we wanted, where that Fibonacci was drawn. So the lows are right here. So now, it's a 7.6 risk to reward ratio. Let's see what happens. Let's move the candles forward. Boom. Now stop loss is at break even. Now you see one indicator that I added, folks. One indicator. The EMAs. As soon as you see that EMA shift on a larger time frame, when you're working on a currency pair that you know it's right at the cusp of hitting its resistance zone, that's what you watch for. As soon as the EMA shifts, that's a perfect spot for an entry, right? And then a reasonable stop loss is going just to the peak or slightly above or where it actually hit its second peak, right? So if you've ever heard the term the M's, right? Here's the M where you have the second peak is lower than the first peak, and then you have an EMA shift. This is a perfect entry for market structure, okay? Now we'll speed it up and continue on. All right, looking good. Oh, that sucks. So now you see that sharp move back up. Unfortunate, right? Because you saw that the trade was working pretty well, and you were at one point 176 pips in profit from a 53 stop loss. So that's almost a 3-to-1 right there. All right. So my strategy, that's not market structure. It actually works on a 3-to-1 risk to reward ratio, and they're very quick trades to take. But now let's just see what keeps happening. Okay, so we hit break even. Let's just continue with the candles. Right, stop loss would have triggered. But here's one thing that I didn't mention before. We talked about entries. Exits work the same way on market structure. So you see an EMA shift right here. This is where you would have been done. Right at the close of this green candle, okay? I'll zoom in to show you. Now, why do you ask? Right here. Okay, you see the yellow cross the red line. That's an EMA shift. Okay, it happened pretty much at the close of this candle, so let's do a replay just to show you that. Okay. Whoops. Come on, candle. There we go. All right, so let's see what happened in the next one. Oh, see, almost a shift there. So that would have not been the actual exit because, look, you could potentially see this kind of thing happening too. All right. But as you saw with the M up here, right? Right there. And those peaks are typically what you would consider the peaks of the M is the reversing candle, right? So the top of this wick, it would be on the red candle, and right here would be looking the bottom of the green wick, right? For two of them. So now we have a W that formed here, okay? And next candle, right? Now we have an EMA shift, and now you're out of the trade. That's it. So unfortunate, right? But you risked 53 pips and you got 84. So not massive gains, but you know what? You doubled your investment, right? Let's say you put in $20, you won $20. That means, you know, you did okay. It was much better than a break even. 1-to-1 is not really what you're looking for, even a 1.5. But you know what? You just got prevented from not making anything again, right? Because we saw how it continued. So look, now it went all the way up. It broke through previous structure and made a new high. All right. So because of that, this structure is no longer valid. Let's take a look at where this actually closed to see if there's going to be another potential trade. All right. So we'll switch that back to the daily. Where's that wick hitting? Right. Hence why we draw the black lines. Look at this. Right here. All right, this candle pattern here. That's what I'm looking at now. So I'm going to highlight that and drop it to the 4 hour and see what we can see. Past that. Right? We got to scroll pretty far back to get to that point. All right. So this is the candle patterns that we see here in this particular area where we drew the square. All right. So the only thing that I can see right here is an imbalanced candle, right, of 61 pips. But if we take a volume profile, right, all the way to the bottom from that top run, we see the volume that spiked up there. We see a big gap that formed and another volume spike in this area. So that volume spike was filled with this gap. So let me show you now, right? We take another volume from this peak even down to here. Okay, this is completely void of any volume. It just dropped. So this is what I'm going to do, okay? Draw again from top to bottom. You can see where that peaked up. I'm going to take the ray and draw it across, but I'll make sure it's white because now I know what it's bouncing off of. Okay, now I'm going to scroll all the way back to where it currently is. All right, and let's see if that was a good potential entry, right? And it definitely was. I mean, it just wicked off that area, right? So even something that's 6 or 7 or even 8 months back is completely valid for trades when you're looking at long-term charts. All right, so now what would we do in this situation? Am I going to enter another trade? You bet I am. Now I'm going to wait for an EMA shift, like I said before, right? We saw that. We weren't able to catch it because it didn't know how high it's going to come up. But again, it's one of the things where if you see it break through your previous high, right? Even if it's climbing, because this would have been on a shorter time frame where it peaked up like this. If on the 1 hour and the 2 hour when it's live and it's climbing, I'd be scrolling to see, draw that potential zone, scroll all the way back, find where it might hit off of, and see how valid that would be. Right? It's much more difficult to do when it's live for sure. It's easier to see, oh, that's where it peaked off. What's the history show? Right? Because you're not going to be able to catch that exactly as it happens. You might be able to catch that the next candle. Right? So you see where it peaked off of, and now the potential drop might be happening. Okay, so, or I'm going to wait for an EMA shift. And there it is, right? Potentially could have taken it at the bottom of that one. So even if we reverse it one candle, right, we can see that this is going to be dropping pretty well, and the shift is almost there, right? So the reason I like the MACD, because I can already tell the signal line flipped, and the histogram is showing that it's dropping the candle before this one closed. So potentially, I could have entered already here, right? And I'm going to be looking right here as my stop loss. I'm not going to be taking it too high. And the reason being is because this kind of movement already shows me that it doesn't really have much interest going higher. You could definitely play it safe and go to the top of that candle, but again, 95 pips isn't really what I look for. 65 to 70 is kind of my threshold. But this one, if it crosses past this point, then I know this isn't going to be valid anymore, and there's going to be different things at play. But we formed a new resistance zone where that candle was. We broke the previous one. To expect it to keep dropping, might be a fool's errand, especially because on the 4 hour, we've been trending upwards for the last month and a half in this section. So it could be very fair to say that, hey, you know what, this might just do a quick 618 retracement, right? So look low to high and just keep dropping, right? Because the 618 will be down here. And to be honest, that might make more sense. Right? Because look what happened here. We tried to take the peak, and it reversed on us, right? Had we drawn that Fibonacci, you saw it just bounced off that 786, so it was a deeper retracement, and it went up, okay? But let's see if this pans out, okay? So far in our trades, we are at 1 small profit and 2 break-evens out of 3 entries, okay? So there hasn't been a loss incurred yet because of the stop-loss movement. So let's see, as deep as this would go, a 0.95 isn't really worth the risk. I'm still projecting that this is going to go down overall. Let's draw to this previous low, take it at the EMA shift. Let's see what happens. Holy cow. So far, another break-even trade, 100%, right? That one candle dropped really significantly. Look, 37 for stop loss, and now 89. So we're definitely in profit. We are in profit in this trade by 52 pips at the end of that candle. Let's continue. Done. Okay. For me personally, when it's dropping that fast, I'm going to stretch the TP. Right? But as you see, we just drew it to the previous low. Look exactly what happened. A little bit of a resistance. So just off 1 day trade. Okay. So now look at this. We had 4 entries. We won 1 of them. Okay. Technically 2, but the win, I mean, I only consider 3-to-1 minimum as a win. Okay. If it's 1-to-1, then I mean, it's decent, but at least it's not a break even or a loss. Okay. So this is the 4th entry. We didn't lose any because you moved your stop loss to break even, correct? So that's 1 entry, didn't work out, but lost nothing. 2nd entry, didn't work out, lost nothing. 3rd entry, didn't work out, but made a little bit of profit. 4th entry, boom. Finished in a day. All right? Let's see how far it actually dropped. Because at this point in time, let's say if you're in a larger lot size and you made a 4-to-1, great. Pull the majority of it out. But look, this EMA is strong. Look at this MACD. Why would you want to stop the trade? Right? Let's see how far down it'll actually go. Next candle. Next candle. Next candle. Why stop the trade, folks? Do you see what I'm saying? Look at this. Now it's having a little bit of a resistance. And here you can judge, okay? So your TP was hit here. Now it just reversed and it would have been the same TP zone. Are you going to risk it going further down? Or do you want to see, hey, you know what? Looks like we hit our bottom. How high is the potential retracement going to be? Potential retracement, it'll be at break even right here. Not worth it, right? So that is your early sign for exit. All right. So we made a 4.16 to 1 ratio, right? It was right here, I believe it was. Yeah, it was around there, right? The previous low, like I said. So that's where we were at. Look, you would have waited an extra 8. You have a full day. 1, 2, 3, 4, 5, almost 6 candles. All right, but let's see what keeps happening. Oh, there we go. Okay, so this is, again, it could be a fake out, it could be reversing, but when I say that the EMA shift is really your, what was I getting at? Your very obvious exit for this strategy. This is why. Because there's always going to be little pullbacks, as you see, right? Little pullbacks as the climb, little pullbacks as it drops, right? Even here, right? It looks like it was going to close, but then it dropped even lower, okay? EMA shift is your first indicator to take the exit. All right, you can even have, like I said, let's just draw it all the way down, see what happens. Let's watch for the EMA shift. When is that actually going to occur? Has it happened yet? Oh, it's about to. Not yet. Yeah, it just shifted right there. So now you see, if you would have stayed in this trade, you lost, let's see, so out of 154, now it's 116, right? So it's exactly 3-to-1, actually, but you lost a 4.1 to 1 ratio just because you wanted to wait for that shift, right? So when you set your target, this is the #1 lesson. Don't get greedy. It could drop further, but you know what? What's the point of trying to get greedy in hopes that it's going to keep going? Right? Like we did. We did this entire retracement. So look, now this trade is won. We won right here. Done. Now, what we see is that there's going to be a little bit of a supply zone here. And at the 618, another potential for an entry would be around that area. Right? I want to take it just a little bit above the supply zone. 60 pip stop loss is my threshold. Right? Because there isn't an actual indicating candle where we're going to go. And I'll take it a little bit further. Right? One tool that you can use is the trend-based fib extension, where you go low to the high to the lower low, right? You can see how high it could potentially go, or you can do one of these, where it's the, the high to the low to the newer high, right? And you can see already that it's long crossed into that zone. So the only thing that would be telling us that this is a potential area for it to continue is just the fib. Out of curiosity, let's see what happens. Bummer. You see, it just crossed and now it's starting to drop. Would I consider that an early exit? Not so much, right? Because now you've been in this for a very long time and we just broke through the low. So that tells me, you know what? Didn't really lose a whole lot, but it's still going to continue dropping on the trend. This engulfing candle is a very good sign to take another entry if you'd like. But at this point in time, we're not going based on structure. We're going just not to miss out, right? So 65 pips. Let's see how far it goes, you know, just to make sure the entry's there, right? Watch what happens. Is this going to be worthwhile, or are we going to lose 65 pips? We're going to lose it. You understand? This is why you don't enter mid-trend. This is why. Because you have no way of knowing where it's actually going to pull up from. Yes, candles are wonderful indicators, but it doesn't give you the big picture overall. You see, this is why I do not encourage trades like this. Only off structures. We hit resistance, we hit an EMA shift, down we go. Right? The only time you would have been able to re-enter this trade would be right here. And then at that point, it's just from that high. So 50 pips stop loss. You see? Because as it flips, you're at break even. And your break even should have been already set when it was 87 pips in profit. So that's invalid. Okay? Let's see where it continues to go. Look at this, spiking up higher. What did we say? 618, potential retracement. Right? Where was the low? The low was right here, but it dropped lower. So this is our new bottom because we already generally did it from there. Now it dropped to there. So 618 is the only time at this point where I'd be looking to take anything resembling an entry. So 65 pips, you know, back down to where this is. So look, 3.6. Let's see what happens. No EMA shift, no entry. Now there's an EMA shift, but did it hit anything off the structure? It barely made it to the 50%. Let's just continue to see what happens. Right? Looks like it wants to keep going down. And there we are. So, very good example right here. This was very low, right? It's too low for me to be comfortable unless, again, you know, I want to set a very, very deep stop loss. But it didn't even hit the golden zone. It was just short. Okay? Maybe there's something we could see on the 1 hour time frame that happened within this candle. But again, I can't zoom in into that smaller time frame from this far back, right? We're in 2013. So now you can see this just kept going down, right? And look how it kept going down. Even though you would have taken a trade right here on the EMA shift, remember it would have been a break even. Not the worst thing to happen. But look, EMA shift happened here. There's a reason why I say that entire candle is your stop loss, okay? If you decide to take an entry right at the bottom of that, you have to have almost 100 pip stop loss. Now for me, that's not worth it to enter. I would probably do it at the pullback, right? And now here's actually a great example of what we missed, okay? As this EMA shift happened, what formed? A very large imbalance, right? So when that imbalance forms, what do? Gan box. This is a fantastic opportunity to see, hey, you know what? There's definitely going to be something happening here. If I were to take an entry, it would be around there. Stop loss just the top of it is within my 65 pip range. I would do something maybe like 54 and take it down. Let's see what would happen, right? Boom, entry. There we go. That's where the entry is, right? If you're uncomfortable with taking that, look, we already have an indicator showing us the EMA shift down, right? We're filling the imbalance. To think of taking the sell stop in this case, I don't believe it's going to go higher. These are the only candle patterns where I would take the limit trades because I'm not expecting it to go much past the 50. Right? So now let's just watch what happens. Right? And we kind of seen it already. But now, look, you're 54 pips in, you're already at break even, right? And when did we set break even? So this might be the unfortunate bit right here. Look, it's 54 just there. Next candle would have broke you even, right? It's unfortunate. I'm telling you, it happens, right? You just got to be careful when you move up your stop loss too. But it's a bummer, it would have broken even. For me, if I'd see that it would still drop, you know what? I might jump back in. Because it's not breaking that 50% mark, right? It only broke it, but it didn't close above it. So that would be a pretty significant opportunity to jump right back in after being knocked out once that candle closes, right? The only trouble is I would be setting my stop loss there where I saw the previous peak. So it could be, a tighter trade, but it could be more rewarding. But let's see overall how this happens. We know it's going to be going down, but we don't know by how much. So I'll flip it over to the daily. Okay. And now let's continue. Oh, look at that go. See, 7 to 1. 7 to 1. And again, that's up to you. Like I said, for me, it would have broken me out, but I probably would have jumped right back in because I saw how this was developing. Okay? And if it breaks you out and your rule is, once knocked out, stay out, that's fine. Keep to your rules because, yes, you may miss out on a few trades, but more likely than not, what you're going to do is mitigate your losses. Because sometimes people jump in on these trades thinking they're going to go the way they're expecting, and it just screws them out of their stop loss, right? Because they'll be like, oh, this is a great opportunity to jump back in with a higher amount, and then they're done. Okay? Don't do that to yourself. So let's see how deep this potential trade goes. Remember, I said we're aiming right here for the support line? Let's see if that happens. Wow, crushed. And not only that, look how we sniped an entry. 52 pip stop loss. Crushed. Right through. That would have been my TP. 811 pips. I can live with that. How long were we in that trade for? For a 15 to 1 ratio? 37 days. So just a little bit over a month. You made a 15 to 1 trade. Now tell me, when you scalp, when you take short swings, how often do you come up with a 15 to 1 trade? Imagine doing one of these a month. And you just saw, we did in the course of 3 months or so, right? Because it was from here we were looking and this candle pattern. This is actually where we jumped in. This was our first entry right here where it was when we were using that substructure right here, right? So our first entry was in this area, was in profit, then broke even. So it hit off the next resistance zone, which was right here. We were in profit and broke even, but there was an EMA shift, so that prevented a high loss from happening. Okay? And right here, it took another entry when we had off the top of this wick, dropped down, went back to break even. And this is the unfortunate thing. This could be the situation, where, you keep trying to get that pair, but you're not getting greedy. Don't just jump in as soon as the stop loss hits. This is crucial, okay? Understand that there's a reason why it hit, so stay out until you can just analyze where something reversed from, what happened, right? Because like I said, if it was the structure trade here, it would have been the entry where we took there, right off the shift, like I said. I want to go all the way down, but it would have been something like that. I said about 50 pips or 60 pips or something like that. Okay, so this trade wouldn't have been the break even. This was that 1.5 to 1, right, where we had the shift up there, right? So no, it was a little bit higher than that. What was the... Can't remember exactly where the entry was. Maybe it was at the bottom of this candle. Either way, right, what I'm trying to get at is when we showed that that was a potential trade to take and the EMA shift was the exit, it's bound to happen sometimes. But now, like I said, when we jumped in, we analyzed that this big imbalance candle very likely need to be filled, draw that Gann box across, stop loss is set slightly above that entire imbalance, and look, we barely crossed that 50% before it kept going down. What's another thing that it was doing? you know, as the rejection was happening off that 50%, look at this white EMA. Do you understand why I draw Fibonacci EMAs instead of regular EMAs? Okay, this is Fibonacci. You could see where it hit 233. Let's pop on the regular up to 200. Okay, came close, but nothing really hit, right? If I take the Fibonacci's off, this is what it looks like. That blue line is the 50%, I believe, and the gray is, let's take a look, just so I'm not talking out of my butt. Gray is EMA color 4, which is the 200. See where the 200 is? It's way up here. Okay, Fibonacci, style. See the white line? That's 233. Just saying. It's a little bit more precise. And that's why I like them. Okay, so there is that. Right off here, perfect example that, you know, it's still within this area, kind of hit off the EMA and continued to drop. All right, so now, was there any other indicator that we could potentially see going off that area? Let's draw the Camarillas. Let's see what happens here. All right, off. How crazy is this? Imagine adding more indicators just to confirm what you're looking for. Okay, look where the S2 and the pivot line are. Look at this. That's amazing, right? Off of, in between the S3 and the S2, that's where we had all these candles kind of opening and closing. And then this big spike barely off that pivot line. And then it started dropping. I guarantee you there's more information to take off a 1 hour time frame in here, but I don't think I can switch it down without being kicked out of the zone where we're at right now. Right? So back to the daily, 37 days, hit TP. What a wonderful trade that was. Okay? And you can see the Camarillas are set up, so on the time frame it does the month, on the hourly it does the whole day, etc. Right? So we'll just take that off. But as you see, we could just add that on there. You know, kind of doubles the fun, so to speak. It gives us that many more potential ideas of where it's going to end up going. All right? So now look, we took that trade, beautiful, in profit. Let's see how far down we could have actually taken it, because the MACD is still dropping. You can see these lines kind of hovered here a little bit, right? But the EMA never shifted. And it's all the way down here. How far could this trade have gone until the shift happened? Pretty well. Look at this. Ooh, wouldn't that have been nice? But let's be realistic. So with me, when I see this, this just means it was going sideways and it still dropped. This right here, this signal and this kind of sharp movement tells me the trade has a very good potential of being done. See how sharp that signal moved compared to this one? So at the end of this candle even, I would be getting out. You know, I'm already past TP. I made a shitload of money off this. I'm happy with that stop loss. Even still, I could have been out, you know, February 25th. I stayed in for an extra 3 weeks just to be out on the same spot. You know, it's completely up to you. You know, was a potential to go longer, you know, and let's see if it happens. Is there an EMA shift? Did I exit prematurely? Oh my goodness, look at those, look at that doji. It doesn't want to flip, does it? But look at the signal line, it's crazy. This is going sideways and this is spiking up, right? There's the shift. So look, you know, I waited an extra 5 days only to lose 70 pips. Is that worth it? Not really. We saw the MACD on how it's shifted up. There's no reason to stay in this trade until the EMA shifts. I'm already past TP. This is a fantastic trade. Look, 1,000 pips. 19-to-1 risk to reward ratio, and I was in this trade, or if you were potentially in this trade, 59 days. So I mean, if you would have taken TP, it would have been 37 days. You stayed in an extra 22 days to grab an extra 200 TP, or 200 pips for your TP. Not bad. You know, we maximized profits at that point. But instead of watching this one pair for an extra 21 days, I guarantee you there would have been another trade to find somewhere else. Okay? Either way, didn't lose anything, didn't lose any sleep, that's for sure. Hit a beautiful 15.46 to 1 ratio off that trade and done, right? You can watch it to see how much further it goes. And, you know, just for sake of arguing, let's take it back. Now you see, do you really want to be in the trade another 2 months only to make less money? Why do you think the support and resistances exist? Once you identify them, use them. Okay, look what's happening now from the high to where we're at. What's the chance that it's a Fibonacci retracement, guys? Right? Always want to see where the low is, right here. We identified that. Look at that. The 50% is what it's bouncing off of. And now it went higher. Because if it doesn't drop in here, that means this wasn't the true retracement. Did it drop to the new low? Yeah, it made a slightly new low, which means that this would have been a potential entry. However, what are we looking at right now would have been maybe this candle pattern somewhere there. You know, either way, look, you're out of the trade after 37 days. Do you really care what happens on afterwards? Like, you can reanalyze and hope for a better entry. And look, I mean, for the potential, where we had the EMA shift would have been right there. Reasonable stop loss, right? I said about 60-something pips. Can't really get that here. That's not going to be a reasonable one unless we drop the time frame. What do we see here on the 4-hour? Right? What movements? Holy! Oh, no, that's the one we previously did, didn't it? No, that's the new one. Look at that. Another imbalance. Whoa. Oh, I guess we're getting all that because we're switching this far back. Let's try that again. We're in July. Okay, so around this area. Here we go. Okay, what do we find here? Potential imbalance, right? So I'll move that out of the way. Look at this. This candle from wick to wick, draw it across. Another great potential for an entry. Okay, look, this is what I'm saying about imbalances. This one didn't quite come to the 50%, so it wasn't really filled. But there's a potential for this to fill in the future, right? From wick to wick. Here we go. Draw this line. And we'll leave the line up. We're not going to come back to that. So let's see if it hits off that line. Okay, the one higher we'll delete. We know that's already been gone and done. Okay, so we're leaving one white line. All right, so there's a little imbalance there. Could have been a potential for another trade entry. But look, even when it comes to EMA shifts, the shift happened here on this candle. You know, to enter off of that candle, look what would have happened. Right? Like I said, it needs to be to the top of that imbalance. That's a large stop loss. You know, even this one, the imbalance, right? If we did the 50% entry, didn't even enter, so it didn't matter, right? But that wasn't a shift, that was a continuation. Here, I mean, because of everything kind of bouncing off the same spot, I would have noticed that, hey, maybe it's trying to fill that imbalance. And it did. And it popped up here, so even another, let's say entry was around there, to here's the exit, 215 pips in 7 days. Pretty good, right? Oh, another imbalance. What's the chance, right? Let's see. There we go. That's going to be a large stop loss, though. Okay, I don't take anything above 65. That's too large for me. I don't want to take that. All right. So that's kind of in a nutshell what to look for. Oh, you see, it closed the gap completely, so that wasn't a valid trade entry anyway to take. What's the chances? Right, I'm just watching. I want to see what happens. I'll pause that though. Oh, what's this? What are the chances, guys? Do you think I'm right about this imbalance? If I am, let's see, 65 pips is my threshold. Right, with it in that imbalance, but you could see it's much higher, so it does make me a little bit nervous to take that kind of a stop loss. This would be more realistic on this trade because it's slightly higher than that peak, and we'll drop it to the potential previous low that it was at, so 6-1. You know, but this is gonna be a trade that lasts a while, so let's see what happens. Maybe it broke me out, maybe it continues. Okay, so broke even. Okay, see, it went into profit and an EMA shifted, so everything worked out hunky-dory. Trouble is, It was in profit 131 pips. Our stop loss was 121 pips. So this trade, we were in it for like a few days and it broke even. Not the worst thing. You could see it was valid, but it didn't quite go as low as we hoped, right? So that's done. Just for the sake of argument, let's see how far it goes. See, and now it's consolidating. This isn't the time to take any entries or exits. But it's slowly going up. So there we are. All right, it's going up to new highs, and on the 4-hour time frame, you could see it's kind of undecisive as it's climbing. So this point in time, you know, when I see a whole bunch of stuff like that, I'm not really interested in taking trades. Right now, when I've hit a peak right here, as you can see, it rejected off there almost twice. What did that peak hit off of originally? Crazy how valid some of these imbalances are, huh? And that one would have been a missed entry, unfortunately, because it wasn't off wick to wick, it was body. The entire span of the body, you can see that just where it was before. The better entry would have been right here to the top of that supply and demand zone. So yeah, you could see how far back things kind of play out. Like that was, how long is this trade? January of 2013, and it's still valid October of 2013, 10 months later. Yep. So now, what would we do here if we're just watching the same pair? Here's the high, here's the low. What's the chance that this is going to be a valid trade? Let's take a look. Looks like it was pretty good. Okay. It worked out already because you wouldn't have taken it too much past this area. Right? So like I said, when it's a 618 or anywhere in the golden zone, right? Even if you would have gotten it exactly at that 618 line, entry wouldn't have triggered. Right? It would have had to been slightly lower. But your first indication would have been where that peak is. Where the next peak happens, you know the entry, and if it doesn't go higher, entry is going to be somewhere around here, maybe right at the top of the candle. How much do you want to go to the top of that previous peak, right? Because you can make a very tight stop loss because it didn't break this and it didn't break this again. Take it all the way down to the bottom here. Look, short-term trade. This is better than that staying in for a month and a half. 4 days and 12 hours. You've made 7.7 to 1. And look, that's when we're just basing it off of a structure. There was a little bit of resistance and a Fibonacci golden zone, right? EMA shift, if you did it only on the shift, this is the situation. This is where entry took place, right there, right? And to the bottom there. So look, you still have, where would have been the entry EMA shift? I would have done it right to the top of the candle plus the wick. You know, 2.1, not the worst thing in the world. If I'd want to do it on an EMA shift, I'd probably do a little bit tighter. Maybe to the center of the candle body, maybe to the top of the candle body, right? So 3 to 3.5 to 1, still very reasonable, and this trade only lasted for a few days, right? When we take the exit there, 3 days and 16 hours, right? Because again, the low of the previous one is kind of my guarantee that it's going to go there. I don't know how far down it's going to go. What else can we see? Oh, look at this now. What are the chances? It didn't make a new high. It did not make a new high. But as you saw, it was climbing up. Hey, you know what? I'm going to be looking at this zone. What's the potential chance that it's going to be hitting that area? Right? Now maybe when that candle closed, I'm going to grab it right at the bottom. And then I'm going to grab my stop loss, you know, just above that. Like I said, 65 pips is my threshold. Let's go 50 in this case. And maybe we'll just take it right here. This is showing, that's another good candle example of it could be a resistance. However, we hit a high. What do we do when we know our low and we've just hit our high and we know where that is? Retracement. Potential, this is as deep as I believe that this will go. And it didn't even move, right? Didn't even move down. It just kept blasting its way upwards. However, did we lose anything? No. Because as soon as you took the entry here based off structure, right? 83 pips in profit and you had 50 stop loss, you're at a break even. That's it. So unfortunately, it's a break even. It's not profit, but it's nothing lost either. That is the key. So out of all the trades, folks, that we just took on this pair in the span of 1 year, I think it was, what, seven trades, right? 2 of them were nice wins, and 4 were break-evens, and 1 was a stop loss. You know, 2 trades is still, for the ratio that you won, I mean, it was 7.7 to 1 on one of them. Again, if that wasn't caught in time, then 3.5 to 1, and the other one was a 15 to 1. So overall, you made 18.5 to 1, and you lost 1 of those. So 17.5 to 1 risk to reward ratio, trading 1 currency pair in 1 year. And look how many currency pairs you have to choose from. Are you getting this now? Do you understand how vital market structure entries are for long-term swings? Right? 1 currency pair, 7 potential entries that we found. And now look, if we were re-examining and looking for bottoms instead, because I was looking for peaks in order for this to drop. If we were actually looking for bottoms, what are the chances that we could have got even more from those climbs? Right? Remember how I was saying EMA shifts in the long term? Look at this. This one didn't pan out, but now watch. Look, EMA shift happened here. It almost smacked it, but it kept going up. Then it happened there, right? But now look at this climb. It finally hit support, right? And what did it hit the support on? The black EMA. Look, it was used as a resistance first, then it broke through it, used it as support twice, and then went up. That's a liquid support line, guys. That's what these EMAs are. Support and resistance. Okay, this is the one that we drew up. Look how valid it turned out to be as well. Okay, look, bounced off there, EMA shift happens, kept going, finally shifted here. Alright, so off that shift, it would have been right at this candle. 41 pips down, what I say, 65 is my threshold, right? So there's 65 pips. Let's just draw the long position from that. The candle closed, long position, 65 pips stop loss. Across we go. What's the potential? Exit would have been about here. That's where the EMAs actually crossed, okay? So there is the potential exit. There you go, 6 to 1. It would have been at the bottom of that candle, right? Or even the top of the green one, whatever. Around that area, still 6 to 1 trade. And you were in this one potentially for 16 days. 6 to 1. And that's just, you know, analyzing your structure. It's not just EMA shifts, because you can see there's multiples that can happen when it's consolidating. You need to be able to identify your structure, have the right setup formulated, like making sure the EMAs are the right EMAs that you use. Look, this is a 987. What happens if I drop the 1000? Right, watch, indicator, 800. Right, that's as far as this goes. 800 EMA. Let's hide my other one. Okay, we'll delete this line. Does that give you as much information? Or does this give you more information? Pretty good. Crossed one, rejected off the other. That was the higher EMA. What's the DeLorean saying? Great. You know, here would have gotten very lucky. Or here at the candle close, sure. Okay. Now, you know, that's pretty close too for the pink one. Didn't quite hit off there, but look at the liquid 987. Okay, look, rejection off that zone. Okay, not only that, but if we draw the ray where we had the previous low, it didn't hit that previous low. Right, it rejected off 2 spots. The previous low, 3 spots. The 233 EMA and the 987 EMA, and up it went. It just took a while for it to take off. Right? However, in this wick, oh man, I wish I could flip it to the 2 hour. Maybe, maybe, maybe. Oh, I might get lucky. Are we going to see what I want to see? Yeah, almost. Almost. It's still a little bit of a wick down, but this is the candle pattern that I'd want to find within that wick. I think the 1 hour might be a little tight because it would be something like this. I would take it from that maybe to the bottom of the wick. Look at this. This would have been a magical entry. Oh, geez. Maybe the 3 hour. Let's see what the 3 looks like. Oh, that would have been so pretty. Look at this. Look at this entry. What the hell? Look at that. Guys. You know, I'm trying to explain this to you. This is what I would call an institutional candle. It's not on a conventional time frame, but usually when there's big wicks and movements like that, there's something within the wick that'll give you that information. And look what we have it here. What a beautiful move. Okay, just fantastic. There's probably more information in this one, but check this out. Check this move out. You know, this was a retracement too. Okay, from this peak. Sorry, from this valley of that wick to the high right here. Golden zone entry from this guy, and this one right off that 50%. So yeah, you could see even rather than just waiting for the EMA shift to happen, right? Because I mean, there was one that happened here. This entry before the exit there, 548 pips. And what would have the stop loss have been? All right, let's see. This is going to be the final one I do, but what would the stop loss have been? 33 pips, maybe 32 to the bottom and a little bit more of that box. Look at this trade, guys. This is right here is the exit. Boom. 16, almost a 17 to 1. And how long did the trade last? 2.5, maybe 3 weeks. Here's the entry. Here's the exit. 21 days. Exactly 3 weeks. And you made a 16.8 to 1. What did we just find out here? Okay. EMA shift. Little bit. Right? EMA did shift, but we were looking more at the institutional play. What did the institutional play bounce off of? The golden zone. What EMAs did it hit? Off this one. Look how it played on the 3 hour. Perfect. 3 things, 3 types of indicators are telling you that this is a potential for a very strong entry. Imbalance, EMA line, Fibonacci. 3 things. You know what? Maybe let's make a 4th. Let's drop a pivot line in there. What do we see now? Let's zoom in on that 3 hour line. What do we see on the pivot line? Crazy. Just crazy. Right off that S4 line. It did not close. It wicked past it, did not close. Rejected from it twice. 4 indicators, guys. I'm putting my fingers up. I know you can't see them, but 4 indicators tell you that this was a perfect entry. 4 indicators. Possibly 5 because the EMA shift happens a little later. But you can see it doesn't shift here. It shifts way up here on the 3 hour. But we were looking at the 4 and the daily, right? And you know that once it's up that high, you could be looking at an exit. You could be, right? What does the fib tell us? Here was the low, and where we were going up. That wasn't a retracement. That's based off an institutional, right? Because it doesn't even make its new high from there. Where was that big red candle? Did we get a high? We just hit the 328. Didn't even come down to 50% yet. Okay? Here, look, if we make the high here, barely close to the 52, but it rejected off a pivot line. And just kept going. All right. There are methods to be able to analyze on free trading view. Okay, and that's what I'm trying to show you. I'm just showing you EMA lines, MACD. That's pretty much it for my indicators. The third one would be those pivot lines. 3 indicators you're allowed on the free trading view before you have to pay anything. 3. Okay? I only needed 3 for this. Everything else is a tool that's you're allowed to use for free on this platform. So that kind of concludes this lesson. I want you to be aware of how important it is to manage your risk. Okay, we've explained multiple times, right? 65 pips, you saw how valid that was. This one was super tight at 32. Why? Because of this institutional candle. If it broke through there, fine, you know, I'll take the loss. But I just proved to you how valid that can actually be. Granted, we are going through a pair that's actually been happening. But I challenge you, watch a couple of my chart videos from March and April. Okay, I'm doing those live. And there was one trade, I made almost a 33 to 1. 33 to 1. I believe it was AUD USD. 33 to 1. My TP was set at 16.5 to 1 for that one, and it hit, and it kept going. The potential was for a 33 to 1 trade on one pair in a month. So check it out. If you want to see how it works live, that's how I analyze all of my long-term charts that I have here. In the next session, I'll be teaching my specific strategy, and it's geared more towards novices. But the nice thing about it as well, there's only 3 indicators that you use, and you only have to wait. You can analyze. It takes 3 minutes to analyze the trade with my strategy, and you can do it at 7:30 in the morning Mountain Time or 9:30 Eastern, and at 4 p.m. my time or 6 p.m. Eastern. Okay, those are the 2 key times to analyze with my strategy that I will reveal next video, where to take entries, and they fill within the day. They are magical, and it's as simple as setting your alert, setting an alert for where it hits the entry, entering the trade, and then setting 2 more alerts for when you're 15 pips in profit to break even, or when your stop loss is hit. And then if you're at 15 pips in profit, you move your break even, or you move your stop loss to break even. That's it. Those are the rules. I've done back testing on this. Now, the win ratio may not be as high as you're expecting. It's about 50% win ratio. The break even is about 30 to 35%. 38% roughly. But the loss is only 12%. That means those trades only hit a stop loss 12% of the time. Okay, imagine winning 50% of your trades at 3 to 1. I'll get into it next video. Hope you guys learned something, and if I see you for the next one, you won't regret it. Take care.